Hey, welcome. How are you guys doing today? It's a pleasure having you here. Yes, indeed. It's a pleasure having you guys here. Today is the 5th of July, 2024, and this is the first Friday of this month. What does that mean? That simply means that today is the non-farm payroll, the NFP. This is the news. It has to do with unemployment. And trust me, the volatility is usually high, right? As we'll be talking about the non-farm payroll and every other thing that concerns it, we are going to be diving into the charts in a bit. We're going to be looking at the DXY, the USD index, and then from there, we are going to look at the Euro USD and a few other instruments. And we're going to be doing this before the news comes out. So based on what we are expecting, we'll see whether it goes according to our predictions, more or less. So hold on to your horses, as they say, as it's bound to be explosive, right? This week so far, we've had the markets run away. When I say run away, we've had the market move in a particular way, right? That makes us to wonder if there is any more room in that particular direction. I'm going to explain, obviously, but first of all, what we have in front of us. If you have a look, the time now is about 2 minutes after 1 p.m., and that's the UK time. Once again, congrats to the new Prime Minister of the UK, of the Labour Party, right? They just concluded their elections. So now, what? Now, Friday. If you have a look here, 1:30 p.m. for the Canadian dollar and the US dollar, our focus obviously is going to be on the USD, right? As it's a major driving indicator, major driving currency. And we are going to be looking at a few instruments, right? But first of all, the previous that we had was 272K, and then the forecast for today is 191K. I repeat, the forecast for today is 191. So what do you think we're going to be having? We're also going to take a look at the history, what we've been having for a little while now, right? Right from last month, we had 272, which was greater than 182K forecast for June. Only May was lower. The remaining months for this year have been on the green, right? So what are we expecting? Are we going to expect higher numbers, right? Are we expecting higher numbers for the employment change? If we have higher numbers, then it is good. And if it is good, obviously you see the color as green. If it is good, then it means that more or less, it could easily be a buy, right? It could easily be a buy for the USD, right? So if this is a buy for the USD, this is fundamentally speaking, because now we're talking about the fundamentals. Then we're going to cross over to the charts, which happens to be the technicals, right? And then from the technicals, we'll look at what we have as well. So based on these fundamentals that we have just looked at, based on what it could be, right? Based on what it could be, based on higher numbers, it could be a buy, right? It could be a buy. Now, if it's going to be a buy, we will now cross over to the charts quickly. We're going to still come back to the numbers here because here is very, very important. And in the next 25 minutes, this is what we're going to have, right? So if you are trading your personal account or you're trading your prop firm account, you need to pay attention. You need to understand what is happening so that you do not make mistakes. You make mistakes, and trust me, it could be fatal. It could be fatal in the sense that the market is most likely going to be pretty volatile at this point in time. So let's cross over to the DXY, or this is the Bitcoin. We're going to talk about this. We did a video also earlier, right, talking about the Bitcoin as well from what we see here and this major drop. But then let's look at the DXY. Now, as we talked about the DXY in our video for today, right, I hope you guys watched it. It will help you to understand exactly what we're talking about. We talked about this major drop as well. As you can see, this major drop to the downside. We now said that price needs to pull back, right? Now, price has gotten to this area of former support. You can see now it seems to be acting as resistance. But for me, this is not where I personally would like to enter this market to sell. I would prefer if the market gets to this point over here. Why? Because we have enough room for what? Enough room for price to drop to these lows over here for our profit. But if you enter here, the risk to reward ratio might probably be 1 to 1. It will really be a tight one. So I wouldn't advise looking for sell over here at the moment, especially with the high impact news that is coming out. So I'll prefer a much deeper pullback to this area. Now, as we're talking about this, you need to look at this in two parts, two scenarios. Let me use the word scenarios. You need to look at this in two scenarios. Two scenarios in the sense of trading with the trend and trading against the trend. So if you are going to be trading against the trend, right, then this is the area for you to start looking for buy positions, right, to take it up. It could easily be around here if price could pull back, or even just pull back a bit and then push higher, right? But this area here is the area to start looking for counter trend moves. And here's the area to look for trend moves. I'm also going to show you using a tool that we normally make use of that I like. I'm going to add the tool to the chart now to show you why this area is more important than this one. And that is called the Fibonacci retracement tool. So by the time I click on the Fibonacci retracement tool, from the highs over here to the lows, you always draw your Fibonacci from the high to the lows in a downtrend, and in an uptrend, you draw it from the lows to the highs. So from this swing high here to this swing lows here, well, this is what we're talking about. So now as we have drawn that as the Fibonacci, we're now going to look for confluence. You can see that we have us at 38.2, 50, and 61.8, right? So here, it's even nothing. There's no level here on the Fibonacci. That's why we said this area here, as you can see, that acted as support before and seems to be acting as resistance, is too minute. I repeat, it's too minute. It's too small to be considered an area of interest. I repeat, it is too small to be considered an area of interest. And that is why if you look at for confluence, just around this area, 38.2, you can see this here that we marked as our area of interest. You can see it coincides with the 50. It coincides with the 50 here, the 50 Fibonacci. We will have another one, the 61.8, that coincides with this one, right? So who knows? Price could even push higher to this area before tanking. Who knows? So 50 and 61.8 are the levels that I would personally like to see, right? Now the time is 10 minutes after 1 p.m. We have about 20 more minutes to go. So we are going to be paying more attention to the time simply because the news is going to be coming out in about 20 minutes. So we're going to be paying more attention and focusing on the numbers. It is the numbers, it's the color, it's everything, the reaction on the charts that we are going to be looking out for to see how the market is going to move afterwards, right? Very key, very important for us to take note of. So, as I said earlier, based on this DXY, now we're looking at this from the 30 minutes time frame, right? Based on this massive move, this massive wave to the downside, right? I would like to see a deeper pullback to about 105.45, 105.45, or 105.65 areas. Very key, very, very important. And only time will tell. And that time is approximately 19 more minutes from now, right? So the good thing now with the calendar is that you don't need to be refreshing it. Normally, back then you'd be refreshing. But once it gets to about 5 minutes, 3 minutes, you see a small timer will come here and then be counting down for us to know that it's almost about to drop. The values here are about to drop. So we don't need to be refreshing this. You can see I just refreshed the page, but we don't necessarily need to be doing that. So for the DXY, we've just looked at this, and this is what we are expecting. Yes, this is what we're expecting on the DXY. It is now left to the market to tell us which way it wants to go. I repeat, it's left to the market to tell us what it wants to do, right? But trust me, looking at the chart that we have right in front of us, this market seems to be oversold. I repeat, it seems to be oversold based on the DXY, at least for this week. For this week, it definitely looks oversold. Meaning that if you are using divergence, if you are using like any of those confluence for this particular chart, and you throw in any of your oscillators like your for divergence, throw in any of your oscillators like the popular excuse me, RSI, or you throw in your MACD, you would most likely have divergence from this point and this point over here. So with this divergence here, you can see you have this candle here that looks like a sort of pin bar. It looks like a sort of pin bar hammer, and that's why it pushed higher to this point here. But then it seems to be slowing down here. I strongly want to believe that this place here is going to be taken out and should push higher. At least that is my bias. I will call that maybe like 70 to 30 analysis, or maybe 80 to 20. 70 to 30 because I'll prefer to see this move to the upside of the USD compared to a down move. But you never know. The market could go either way at the end of the day. And that's why I always tell traders that expect the unexpected. So this is for the US dollar. Let's look at the Euro USD. Of course, the Euro USD would definitely be in the opposite direction. And you can see now the same scenario with the Euro USD. Here being an area of resistance, you can see it seems to be acting as a form of support over here, right? But from here to here is a bit too close for my liking, and I'd like to see a stronger pullback, a further drop over here, right? So let's see how the market plays out. It will definitely be interesting to watch because once again, just like the DXY, we have this here, this major wave, this up wave for this new week. We have it as a form of overbought. It's pretty much overbought. And don't forget, like your RSI or MACD, you should more or less have like divergence here, picking up this point and this point here, right? So as you have your divergence, right, as you have your divergence, the next thing to to look out for is going against the trend, because the divergence would have to do with counter trend trading. I repeat, the divergence would have to do with counter trend trading. And with this counter trend trading that we have right in front of us, it is going to be a thing of um, where would you like to sell to? Because also the market doesn't necessarily, I repeat, the market doesn't necessarily have to, take out the entire up move. It could drop to like the Fibonacci, like as we put the Fibonacci up for the DXY, it could easily drop to an area, right, where you have like 50, where it could easily be like a 50 retracement area, could easily be like 50 retracements, or it could easily be 38.2, or it could be maybe even 61.8, or whatever the case might be. But don't forget, as we just said now, now based on this move to the upside, right, as we can see this strong move to the upside, it is now what? It is now overbought. Now, guys, if you have any questions, feel free to ask. This would also be on replay, so you can watch based on what happens. But we're here together to talk about the market, to see how we could hopefully benefit from it, how we could place trades and benefit from it at the end of the day. And of course, also, if you're in any trade and you're struggling with it, maybe you entered like this chart to sell, you sold somewhere lower and you didn't use stop loss and you're in heavy drawdown and you're trying to ask, what to do, let me know that we can try to figure it out together. It's all about troubleshooting what the problem is at the moment, right? Or are you trading your prop firm? A lot of people are going into the prop firm trading now. Are you trading the prop firm, or finding it difficult? I repeat, are you trading the prop firm and finding it difficult to make ends meet, right? If that is your case, then ask questions if you have any, right? Ask questions if you have any. So based on what we have 12 more minutes, and in the next 12 more minutes, we should have some heavy movements in the market. So don't forget, if you are in a trade, reach out to us. Let's find out how the trade is going. Let's find out what are the possible scenarios that could happen, right? So this here is what we just said uh for Euro USD. So let's quickly take a quick look at the Pound USD. Let's take a quick look at the Pound USD. You will notice something. You notice that most of them are more or less painting the same scenario. You can see this one too, more or less painting the same scenario, simply because of the strength of the USD, what the USD has been doing. But in this case, I'll call it yeah, the strength of the USD. If you remember from the USD, the DXY right here, right? Let's quickly put it up. Here from the DXY, we've had a massive move to the downside, or we could as well just call it the weakness of the USD for this week, right? So you notice that most of these instruments that we're looking at now, they look pretty much similar. They look pretty much similar. That means that yes, indeed, they're all in sync. Yes, indeed, they're all moving in an aligned manner. Look over here. We have this as a resistance, and then price broke out. But if you're looking forward to, because this is also a wave to the upside, this is also an uptrend. If you're looking forward to buying, trust me, this point here would not be advisable, because the risk to reward ratio is way too close. This could easily be your risk and this could be your reward, which is about 1 to 1. It is not ideal. But imagine if you enter from here, your stop loss is like below and your take profit is over here. This is what you're going to make for your profit, and this is what your loss is going to be here. This will probably be maybe 1 to just giving it an eyeball, maybe about 1 to 6, 1 to 5, 1 to 6, 1 to 7 reward, which is obviously a fantastic trade, but not from here. I repeat, not from here. So the best thing that any trader can do now, right, based on where it is to look for counter trend opportunities, CT trades in the market to see how you could hopefully take the market down, right? CT trades in the market, hopefully from here, let the market drop further down. That simply means for the counter trend traders, this would definitely be a good one. But be careful because the news, the non-farm payroll coming out in the next about 9 minutes. Very soon, we're going to be switching over to the calendar over here to check what is happening, right? So based on what we are discussing, we are expecting, I repeat, that is my number one bias. Remember, I called it like 70 to 30, meaning that I am looking forward to more or less a particular direction. It's all about directional bias at the end of the day. My directional bias for like the Euro USD is for the market to drop. It needs to pull back this week at least, right? As opposed to continue to push higher, which is 30 for me. So 70 to the downside, 30 to the upside. And this is the GBP USD, also known as the cable. You can see pretty much similar to the Euro USD that we just looked at. Now, let us look at gold. Let's look at gold. Wow. It seems like we are even looking at the same chart over and over and over again. Because if you look at this gold now, you notice what? You notice that it looks what? It looks pretty much similar. It looks pretty much similar to the Euro USD and pretty much similar to what? It looks pretty much similar to GBP USD as well. What does that mean? That simply means that, they are pretty much aligned. As they are pretty much aligned, it is now a thing of what? It is now a thing of they should more or less move in tangent when the news comes out. And we have about 8 more minutes, guys. 8 more minutes. Let's see how the market is going to react to the non-farm payroll numbers. This is going to be interesting to say the least. Let's see how the market is going to react to the numbers. Is it going to pull back heavily across board for the Euro USD, for the GBP USD? Is it going to pull back heavily for gold that we're going to be looking at now quickly because we have about 7 more minutes. 7 more minutes. What would the numbers look like? Is it going to be a thing of higher numbers, right? I mean, is it going to be a thing where the numbers that we get are uh, higher than the forecast? Or is it going to be a thing where the numbers that we get is what? The numbers that we get is lower. So that's going to, help us to have an idea whether it's going to continue in this direction for the DXY, whether it's going to continue to fall and become more over, more over sold, or is it going to pull back for the DXY? And is it going to push higher? Only time will tell. I repeat, only time will tell. But one thing is for sure, right? One thing is for sure, and that is we are expecting high movements in the market, and we're expecting the market to probably give us some slippage, probably give us some whipsaws, probably give us, of course, spread increment across board. But then it depends on the broker that you are using. Talking about broker, that will be a topic for another day. I repeat, that will be a topic for another day. But now, quickly, guys, because we have roughly about 5, 6 minutes before the news comes out. And you can see earlier, we said we don't have to keep on refreshing the page. You can see the timer over here has already started. 5 minutes 14, 5 minutes 13. So we have approximately 5 minutes and about 8 seconds now. And before you know it, the numbers will pull up here and then we'll have an explosion here across board for all these guys, right? You have an explosion here across board for all these guys. So you need to what? You need to be ready because the market is going to move. I repeat, the market is going to move. In the video that we did earlier today, we also talked about the Bitcoin. So I'm just going to quickly pull up the Bitcoin because everything, as we said, everything is due for a pullback. Now you can see pullback right from here, right from these lows. You can see you easily had like your divergence. From your divergence, you can see price is already pulling higher. I got a little entry somewhere around here on a buy. Now, based on the news coming out, BTC USD, it also still has the USD inside, so it can easily react in a heavy manner as well. It's not that correlated as such, but trust me, it could also react heavily. But this Bitcoin is massively also due for a pullback. And if we're going to be adding the Fibonacci like we did earlier, you will know that we're probably looking for a pullback to maybe like the 38.2 or 50 or 61.8 area of interest. And if you look closely, right? Oh, let me adjust this. Oops, let me just adjust this quickly. Let me bring it out some more so that we can see the numbers. Now, if you look at it closely, you can see this is 38.2 here, this is 50, and then this is 61.8. So where you have confluence, first of all, at least we have confluence at 38.2, right? Which happens to be more or less TP2 area. So we could easily have the price move higher to this area here, maybe before dropping. So if you are a trend trader, you're looking forward to, obviously, you're looking forward to selling this particular chart over here, right? So from all what we have been talking about, one thing is common between the Euro USD, the Pound USD, the gold, and the Bitcoin. One thing is common from our discussion. We have 3 more minutes. We're going to be switching to the numbers, and we're going to probably leave it on a DXY because the DXY is going to determine more or less the movement uh, for the majors, gold and Bitcoin. So we have 3 more minutes now. But one thing is sure, it is going to be explosive. One thing is sure, we're going to see heavy movement in the market right about now, right? So we have about roughly 2 more minutes now. We have about 2 more minutes in the market. So guys, are you ready? That is the question. Are you ready for the explosion that is about to take place? Let's see how the market reacts to this news, right? 2 more minutes, 2 more minutes, right? So guys, if you do not have any, what's it called? You don't have any directional bias for the market, then the best thing to do is to be on the sidelines. I repeat, the best thing to do is to be on the sidelines. I repeat, I'm repeating it again because the market is going to go a bit crazy sooner than later, right? So be on the sidelines if you do not have any directional bias. It is very key that your money should be in your own pocket compared to your money being in somebody else's pocket. I repeat, it's important for your money to be in your own pocket than for your money to be in somebody else's pocket. Don't try to force the market to give you anything, right? Because there is a thin line between gambling and trading. I repeat, there's a thin line between gambling and trading. Guys, if you have any questions, quickly ask. We have about 1 more minute. And if you look over here, it's less than 1 more minute. Now, this is where the countdown is. I need to clean this up. This is where the countdown now begins. 33, 34. Don't forget, we're going to be toggling between that and the DXY. Let's put it on the DXY to see whether it pushes higher or pushes lower. Okay, 23, 22. This is the moment that we have all been waiting for. Is it going to drop down some more? Is it going to push higher? What is the case going to be? And it is more or less going to be volatile as well. The volatility, right, that we're going to have now, more or less, is the market jumping. And we have about what? 1-0 pending. Guys, are you ready? Let's see what we have. We're going to switch to the chart as well to quickly see the reaction quickly. The numbers pending. Come on, give us the numbers. DXY. Boom. Can you see the DXY up? Let's see how high it can go and whether it will be sustained. But we have a massive jump or whether this is just a false jump to the upside and then it continues to drop. Who knows? Let's pay attention and see how the market reacts to this. Let's pay attention and see how the market reacts to this, but it is bound to be volatile. This is still pending. Let's refresh this, come back here. Now you can see it seems to be going back down, but let's see how, okay, it seems to be going lower. But that means that the market still wants to drop and be more extended to the downside. Okay, beautiful. You can see we have this here, 206K, which is obviously green. So it should be a thing of buy, but the market seems to be tanking. And then also look, we have 4.1% as unemployment, which is negative, and the market seems to be reacting. But this is just 1 minute. I repeat, 1 minute. If you are a counter trend trader, you could probably be doing like the martingale, you could be fading your position or whatever the case might be. And this could easily be something that you could be doing over here, right? So this is what you could be looking at over here based as a martingale trader, picking this point here, using RSI, using MACD. So let's see how this plays out. Is it going to end up being down? All right, because we need to wait for this candle to close, this 30 minutes candle that just kicked off. Let's see how it ends up. I'm still pretty much of the opinion that I would like to see the market push higher to these areas over here, right? It's due for a pullback. But so far, the market has dropped and it's looking like a massive candle to the downside. I hope nobody was injured, first of all, and I hope that we all have our stop loss in place. It's very key, very important that your stop loss is always in place at the end of the day. Stop loss is there to protect your account. I repeat, stop loss is there to protect your account, but even with the stop loss, you could easily have what is known as slippage. Some of you might have experienced slippage from your broker, where you put your stop loss, it doesn't close there, it closes at a further place, meaning that you have a bigger loss at the end of the day. The opposite too could also be a case of take profit. It could also be a case of take profit where it goes past your take profit and you have a bigger profit, right? So it could be a case of either of the two. So far, you can see this area reacted over here. This area held its ground, but trust me, for me, this is not an area to be looking forward to selling. This is not an area simply because of the risk to the reward ratio that we had over here. One thing I also need to say is that even if the market, presents you with an opportunity to enter, but if the risk to reward ratio is not aligned, if it is not good to go, meaning that it is at least 1 to 2, if it's not good to go, then I would always advise do not take that trade. Leave it alone. Even if it works out like what we can see over here as it's working out, going to the downside. This is just 3 minutes after the news release, 3 minutes. And we're going to be wrapping up today's NFP in a few minutes. The numbers have come out. We've seen the reaction. I remember we said 70 to 30, we're expecting a pullback, but it seems that the market is not doing what we're expecting. Of course, we are not in control, we're not in charge of the market. As is just to analyze the market, and if it does what we expect it to do, then we can take advantage in that manner, right? You can simply take advantage in that manner. But trust me, we need to wait for this particular candle, this particular 30 minutes candle to close fully, because I would like to see a full up to the upside on this DXY, and then that would make the Euro USD, Pound USD, gold to drop, right? But we are not going to force anything from the market. I repeat, we're not going to force anything from the market. We're going to wait for the market to play out and do its thing. How much are we even trading that we are trying to make the market to go in our direction? We don't have the kind of funds, kind of resources to move the markets in our direction. All we can do is to analyze, and those that have the money makers, let them move it, and then we simply follow, right? But don't forget, this here was not a good risk to reward ratio. This would have been a better one here. So this could even be next week that it gets here, who knows? But you can see the candle that we have here based on the news. You can see you could easily call this, for now, it looks like a doji, more or less, a massive doji. And this goes to show you that, yes, indeed, this area is still working. Remember, we call this area of divergence if you're using the RSI. If you throw your RSI up or you throw your MACD on the chart, right, you have this as what? As a massive divergence showing you that it is oversold on the DXY. And that's why we're having this as this candle. By the time we probably look at the Euro USD as an example, you might probably see the same thing in the opposite direction, which is what we have here. As you can see also, this was the area that we're talking about. And we said to buy here wouldn't have been a good one because the profit would have been here, the surplus would have been here. And you can even see with this massive candle would have easily would have been taken out, right? Would have easily have been taken out, but then it's not moving too far. We still have divergence here in play, so the market could still pull back to this area. Even if it doesn't pull back to this area today, maybe Monday, maybe next week could be the scenario here. But from what we have here, trust me, it needs to pull back. It needs to do a deep pullback from our analysis. But let's see how this candle closes. This particular massive looking candle that was as a result of the non-farm payroll that just dropped. Now, with that said, we're rounding up now. We have seen the numbers. We have seen the reaction. It didn't react exactly as we wanted. Would have preferred it to drop massively like this massive candle. Just have a massive candle to the downside, and maybe the next follow-up will get to this point here. This is what we would have loved to have seen, but it did not go our way. But notwithstanding, we did not place any trade simply because we are looking forward to price getting here as a trend trade, TT trade, or even as a counter trend trade, you should still be inside. If you had placed your entry here and you had one that fades or does a martingale, you should still be inside here, even with the news and with the reaction of this particular candle in this area here. This area very important. Looking back, you can see it has acted as resistance. So it's a very important area for the Euro USD. So with that said, I want to say thank you. Guys, pay attention to the end of this 30-minute candle, right? Which is about 23 minutes from now, but we're going to be closing this. Pay attention. We'll also pay attention. If we have to do a follow-up video, we'll do that for you to explain what happened after. But let's see how this goes at the end of the day. I hope you had a wonderful week. If you have any questions, you can comment on this live. If you have anything that you want to discuss, you can always reach out later and we'll get back to you, right? And check the links. We have a school that you can always get more information that will help you to trade properly at the end of the day. So I want to say thank you for tuning in. Thank you for joining us on today's non-farm payroll. And then we would wait and see how the market, how this particular candle closes and the follow-up. Will it still drop down to these lows? If yes, then that means that what we predicted as a massive pullback, it occurred. Even if it doesn't occur today, we still have next week. But trust me, we need this massive pullback. Okay, thank you guys. Enjoy the rest of the day and goodbye for now. Cheers.